Andrew Holland is Chief Executive Officer at Avendus Capital Public Markets Alternate Strategies. He's joining us with his perspective on things. Andrew, good to have you with us here. Thank you very much. Very nice move upwards over the last 7-8 trading sessions now. What next, though, is the question. I mean, I think that's the question out there in the US as well, where data is not very conclusive in terms of whether it means interest rates, which is the big bugbear, will stay higher for longer, they need to go up more, or we're done with the hiking cycle. What's your own sense? Where do we go from here?
Well, I think in terms of the rate hike cycle, I think we're there or thereabouts. It's quite interesting. You listen to the Fed speakers this week. That even they are kind of divided in where they think what they should be doing. And some saying we should have more of a rate hike, one more rate hike, and then go and pause. And some saying that maybe enough. We've done enough already because the tightening credit will do the next trick. Interestingly, though, there are also some of them talking about a mild recession in the US. So I think we're heading there. So there was two things that we've always talked about, Prashant, and the two factors which would make the Fed go and hold. One was unintended consequences, which we already have, and two, the fact that we're heading towards whether it's a mild recession is debatable at this point. But I think that I would think they do an RBI and they should go and hold, and I think that would be the best thing for the markets and for the credit markets in particular. So I think worst case is they do 25 basis points and go and hold before they start reducing before the end of the year. So the good news is that we will see rate reductions towards the back end of the year. And possibly the RBI could be a leader in that and maybe take a first step in October at reducing rates. So getting more constructive over the kind of longer term from where we were, say 6 to 9 months ago, and it's playing out, the kind of way we were thinking, and that get some pain, then we'll start to see the Fed pivot, and then that will be good for markets.
Okay. By the way, the technology stocks are still under a bit of pressure. Infi, TCS, HCL Tech Mahindra, all your top nifty losers right now. Andrew, hi, good morning. How are you feeling about technology? Clearly, there are headwinds coming through, and when the largest company tells you that, you got to sit up and take notice. Do you see more derating for this sector now?
I think in the short term there will be a further derating, because if you are looking at a mild recession in the US, this will affect many sectors, not just the banking sector. And then TCS, kind of outlined that in their statement. It's broadened out from the kind of financial sector into other sectors. So it's going to be a hard slog for these companies. And I think probably we're going to see more downgrades to earnings for this sector over the course of the next 6 months. Now, don't take anything away from the whole technology, build out over the next 2 to 3 years is going to be substantial as well. So there will be a time to buy, but I think let the downgrades come first, and the prices react to that before dipping toes, I think, at the moment.
All right. Hi, Andrew. Good morning. A quick check on the markets. We were down 30-40 points hard. We have moved back into the green. The Nifty Bank has recovered a goodish bit as well. So from an index perspective, pretty good going. And the Nifty Bank, that's the one that's driving ahead. But Andrew, you all run a long short book, right? How has that positioning changed in the last 1 month or so? And if you could give us a sense about how you position now?
Yeah, so I mean, it's obviously, with the markets, getting under that 17,000, there was a lot of fear that the contagion from the banking system would continue. That hasn't played out, and the first part of the recovery, not just for India but also globally, was short covering. There was a lot of shorts by the FBIs coming into this month, and I think that's been unwound to a large extent. So obviously, playing on that. In terms of the kind of rebound, I think we've probably done a little bit of where we need to go in the very short term in terms of the recovery, and I think now we're just going to probably stand pat a little while until we get the Fed speak, not necessarily what the outcome is, but the speak in terms of May the 2nd, May the 3rd. So I think it's going to be a little bit of trading range from where we are today. So playing that around, I think it's going to be very rotational. I think the banking sector should show some good growth, and the IT sector against that will show some weak results.
Andrew, Sula is up about 2.5%. It's been doing well. I know wine is a big subject in your household. What do you like, and what do you, as you say, you describe it, renting, and what are you buying? What's the thought process now? Broadly, I know you don't want to talk about stocks, but sectors.
No, we do like the beverage sector. We think that there is a move to premiumization across the board, and that will play out over the longer period, not just over the next 6 months, but over the next 2 to 3 years. And you saw that in Sula's results as well. So I think that's a big trend. We have a young population who are willing to try and move up the curve as quickly as possible in terms of what they want to drink. So I think that bodes well for the industry. So, if I look at kind of FMCG and beverage, I think that beverage has the growth and the defensive qualities compared to FMCG, which has the defensive qualities, but probably less growth in the very short term. So that's one of the things that we do like. And in terms of what we're renting, I think having seen the markets move up quite quickly at the moment, I think it's time to just pause and take some of these gains off the table in the very short term.
Okay, so for the viewers who don't know, I think Andrew's wife Sonal is a wine educator, a connoisseur. It's great, right? When your wife is like or your spouse is either a chef or a wine connoisseur. I mean, you're always well fed. And are you well drunk, Andrew?
Not at the moment.
Hopefully not at the moment.
Yes. Two things on that. One is it's very, very nice now when you go to a restaurant, you don't have to look at the wine list. So that's one good thing that I don't have to do anymore. And two, obviously, you get invitations to taste some of the top wine. So that's not a bad thing. But usually I'm more kind of to looking at how the beverage industry is going in terms of and tasting.
Okay, so investing in it is perhaps better than tasting it. I don't know about that. But what about some of the other spaces? I mean, this whole new age technology companies have sort of they're trying to make their comeback in some way, whether it's a Nykaa or a Zomato. But competition is also getting pretty intense here. Is this a good time to be buying, or given that we could be heading into a recession, there are layoffs, etc., this is a space that perhaps you wouldn't touch?
Yeah, I think I obviously saw the reports of Reliance opening up a similar kind of Nykaa kind of franchise. So obviously that's going to lead to more competition. So just when you were hoping that these companies were kind of getting towards that profitability and moving forward, you've got a new big player in town who could disrupt the pricing a little bit more. So I'd like to see how that plays out over the next 6 months. But if you remember from some time ago, I was liking this space a bit more, and it was starting to turn around. But I think with the competition now, I think again it's just time to kind of look and see what happens and see how the aggressive if there is aggressive pricing in this area, which will affect the companies.
All right, Andrew, in the past you've mentioned that defense, renewables, and I think the travel and tourism space was something that you liked. Have you changed your stance, or you continue to remain positive on it? Because some of these stocks have done very, very well.
No, continue to like it. I mean, it's going to be, we know on defense and renewables, it's going to be an ongoing global capex expenditure. And now the problem with defense is that, the orders are very lumpy, and we saw some recently. So, you can never be assured when that kind of order is going to be given by the defense ministry. But once they are, they're very lumpy and very big. So I continue to like that. Hotel and travel industry. I mean, you've seen the numbers, right? They're just fantastic, and still getting a hotel room is fraught with prices you didn't think you'd have to pay before or have paid before, and that will continue. And I think tourism into India, I think will continue continue to pick up as well. So I'm very kind of happy to keep that theme going for a number of years as the economy continues to grow. People within India travel within India rather than going offshore as well. So I think there's a lot going for the whole industry, and hotels is one which I think will benefit because of occupancy and the leverage they're getting from the food and beverage sales.
All right, Andrew, we'll leave it at that. Well, okay, just before we let you go, right, one space that I wanted to check with you was autos, because there has been a big comeback in that space. I mean, this year, stocks like Tata Motors, Bajaj Auto have been the biggest gainers, up almost about 15-20%. Any thoughts whether there's some follow-on buying that you're expecting to see here? Do you like this space at all?
Yeah, it's been very rotational, hasn't it? I mean, a few months back, no one liked the sector. And you were seeing downgrades to earnings and lackluster sales. So I think it's more rotational. I think, we get oversold and then you get the bounces very quick. But, to be honest, there has been a lot of roadshows by Tata Motors recently overseas. So I think that's helped the stock in the recent rebound as well. But it's not a sector I'm getting overly excited about at the moment. I still think there's other areas like private capex, where you can make more money in industrials.
All right, Andrew, final question before we let you go. How does the English Premier League season wind up this year? Man U makes it to the top 4, and who takes home the cup this time around? Arsenal, or do you believe Man City has got enough?
Well, for Sonia, I'm sure she would want it to be Arsenal. But now they have. In fact, it's in City's hands, right? I mean, they will play Arsenal, and if they beat them, then and win every other game, then it's theirs. So I hope it's a tight race because it's been very interesting, right? It's made it a little bit more interesting to watch this season rather than just the usual kind of Man City and Liverpool. So I can't say that I want Arsenal to win, but. I suppose.
Andrew, you can be on our side for once. We have had a rough couple of years and we were hoping for the title. I mean, I'm in Sonia's camp as well. So let's hope something works for us.
And after a long time, right, Arsenal has kept the challenge alive. So it's, as you said, I mean, it's good football, whatever it is. We've seen a comeback after a while, so we're gunning for it. But Andrew, thanks a lot for joining in and speaking to CNBC-TV18. Appreciate your thoughts. So that's about two passions, equity.